right, portfolio rule number 3. It's check your underlying stocks for quality. Check your underlying stocks for quality, because when you're selling cash secured puts, what you're saying is, I will buy this stock at a certain price, and they're going to hold you to it. So you have to know, one, that price is a good price, two, that you're not buying garbage. So just because you can sell an option on it doesn't mean you should sell an option on it. We all have, there's all kinds of sayings that are placed just exactly like that, but trading is the same way. So let's take a look at a very popular stock, NEO. NEO is very popular, a lot of options on it, and I'm gonna get into open interest and stuff like that on options. But first, like I said, I want to look at the underlying stock. So people can get crippled by analysis. So it's called paralysis by analysis. People don't know if they're making a good decision. They got to keep researching and come up with tables and formulas and all kinds of benchmarks. Now you can do that, and people do that at big firms, but it's not necessary. It's not, you could look at a few things and still be good. So we're looking at the underlying now. We're not going to look at volume or anything like that. All we're doing is this a good company to own? Now here's NEO. Earnings per share, -$3. Right off the bat, it's got one against them. Okay? Earnings per share is, and then the price to earnings ratio, there's nothing here. So that's a red flag right off the bat. It's on the snapshot. Let's go to analyst research, see what the analysts have to say, because these are the guys that dive into everything. Now, some analysts have it at -30%, and some analysts have it at plus 80% or 78%. It's currently trading at 12 or 13, and the consensus is 21% up. I like these numbers here, but I don't like the variance here. I don't like how split they are. Look, it could cut in half, or it could nearly double. That's what we're working with. What if I want to put in a cash secure put at 13 or 12, and then it goes to 7? That's not what I want. So look at the variance here. Okay, I mean, they are all buy ratings. These are all buy ratings. If you quickly look at them, they're all way above the price target. So there's a little bit of assurance right there from the analysts. But let's look at a few other things. Fundamentals. Look at fundamentals. If we look here, these margins are decent right here. Institutional ownership, I don't like how low that is. I like around 50% or higher. Operating margin, negative. EBITDA, negative. That's earnings before interest, taxes, depreciation, and something else. Net profit, negative. Earnings per share, negative. Return on assets, negative. Return on equity, these are all negative things. Okay. No dividend at all. 26,000 employees. That's pretty high. This is a Japanese firm. This I probably don't want to own for very long. I want to see something in a positive direction. Let's look at earnings, see if they're consistent on their earnings. All negative earnings. This definitely want to stay away from. Okay, you could trade NEO all you want, but don't own it long term. Let's look at another stock here. This may be a long video because that took me 4 minutes already. Tesla. Let's do the same exact thing with Tesla. Price to earnings ratio, 65 times. 3.5 earnings per share. Pretty good. Analyst research. We have them going from, see this huge variance again, between $24 and $350. Give me a break. You got all holds here. You got one buy. It's not looking good. The reason why there's such a big variance is because nobody knows what's going to happen with electric vehicles. They don't know whether it's a bubble or it's a long-term solution. Okay. Um, Nice ratios, decent ratios here. Ownership close to 50%. That's good. I like that. All positive margins, like that. Return on assets, all positive. Tesla is, if you're going to go with an electric company, this is the one, but still a lot of uncertainty in the electric field. Everybody may like electric, but listen, there's still major issues, and I could get into some of those a little later in another video. Earnings, good earnings, consistent upward trend on earnings. That this is good. I like this here. Um, let's do one more. This video is getting pretty long. So those are both electric vehicles. That's what it looks like when something is very volatile, when the sector is up for grabs. So let's look at something that's already settled. Food. KHC, Kraft Heinz. We all know Kraft Heinz. Let's look at what their stock looks like. Okay. Price to earnings ratio 13 times. Solid. Earnings per share 250. Solid. We got a dividend. That's solid. Those are all good numbers so far. Let's look at analyst research. Now, it's not so much that there's a lot of upside potential, which this one has a decent amount. I want to see these very tight right here. So low is 38, high is 48. It's currently trading at 41. So this is saying that it could go down to 38. Fine. I'm fine with that. I'll put it in cash secured puts at 40 all day, knowing that the upside potential is 48, and this is a solid name, been around forever. Very tight, all upside. Okay, nice. Buys here, nice price target. Here's a few holes. Of course, people like growth. This is not a growth name. There's going to be some holds on it. Let's look at fundamentals. All positive, all under one. Very nice. Ownership, nearly 85% ownership by institutions. All positive margins on profitability. All positive on the earnings valuation, management effectiveness, return on assets, return on equity, return on capital. All positive. Dividends, very good. This is what I like. I'm going to check one more thing. Now, like I said, you could get in balance sheet, income statements, all that, but you're going to be doing tons of work that people have already done for you. Okay, let's look at the earnings summary. Look at how solid and consistent these earnings. We know where these earnings are coming in every single month or every single quarter. These are cyclical. 8, 6, 13, 6, 7, 16, 7, 2, 7, 7, 8, 3. Very consistent earnings. Incredibly consistent. This is what you want to trade. Now, it may not have the cachet, it may not have a lot of premium behind it, but if you get stuck with a cash secured put, you know you're not getting burned. You know it's not going to zero like Workhorse. You know it's not going to zero like Ride, like Lordstown. You know these names aren't going to zero. These will not burn you. And that's why you need to check the underlines. That's rule number 3. Check the underlines.